We are watching Wall Street, where stocks jumped as President Donald Trump unveiled a trade deal with the UK. So the Dow up about 250 points. Nothing was signed, but Trump says the final details are being written up. It marks the first major agreement since Trump slapped tariffs on nearly all U.S. trade partners. All right, so let's take a look at our interactive stock market heat map. This is brought to you by FinViz, showing the top 500 stocks. As you can see, there's a lot of green on the board after that announcement. So let's bring in CBS News contributor JD Durkin live at the New York Stock Exchange. Hi, JD. Let's walk through the reaction on the markets today.
White smoke at the Vatican does not, in fact, mean a new trade deal necessarily, but perhaps for a busy news cycle like today, it might as well have been one and the same. We did get this highly anticipated announcement from the White House, of course, with regards to UK, a specific focus on steel, aluminum, auto exports as well. So we did see the markets pop nicely earlier into the session, but it is, of course, worth noting here into the close at 4 o'clock here on the East Coast. We did see a fair bit of selling, so we gave back a lot of those gains. To your point, the major market indexes finishing up in positive territory, and we saw small cap stocks, which we count in the Russell 2000, really leading the way, which tells analysts we had a bit of rotation happening earlier today. A little bit more context on that UK deal. It is worth noting the United Kingdom is a country with whom we have a trade surplus with. In other words, we do not have a trade deficit. So if you're looking at the stock market today and wondering why, after finally getting a highly anticipated trade deal, we did not see more of a reaction, I would argue it's likely because Wall Street sort of already had this type of deal baked in. The question is for the vast majority of countries with whom we do not have that particular type of trade balance. But it's worth noting, otherwise on Wall Street, all 7 of the so-called Magnificent 7 tech companies finishing up into the green. Those shares were led by names like Tesla, Amazon, and Google. We saw 8 of the 12 sectors of the S&P 500 finishing up in positive territory. And today on Wall Street makes 11 of the last 13 sessions we've had green on the big board.
All right, here's something that we really haven't talked about. Fast food chains, new numbers showing that the fast food chains are actually losing customers. So let's talk about that.
Yeah, declining same-store sales for Popeyes, for Burger King, for Tim Hortons. These are some of the biggest companies under Restaurant Brands International. And it's been a bit of a tough year for a lot of the fast food companies. I would argue what we heard out of the earnings call earlier today is really a continuation of what we've heard from fast food giants like McDonald's. They cite some weather patterns that kind of pulled back on consumer spending. But really what's emerging is the portrait of a consumer facing a little bit more distress than has faced in previous years, and maybe choosing to be a bit more choosy, if you will, pulling back on some of that discretionary income. We did see shares of Restaurant Brands International down only about 0.5% today, despite all of that downward pressure, and shares of the company are still up 3% since the start of the year.
Okay, so finally, JD, Toyota says tariffs are going to take a bite out of profits. Why don't you tell us about that?
Yeah, of course, this is a Japanese-owned company. It's got huge exposure to the United States, and this was the type of automaker that analysts had been circling now for many months to say, keep your eye on a company like Toyota, because we will watch very carefully what the impact of the White House's tariffs policy will be, despite the fact that it is a company that dual lists at the London Stock Exchange, also has a listing right here at the New York Stock Exchange, and it is Japanese-owned. The company still managed to sell more than 2 million cars in the U.S. last year, and so there are concerns that the sort of tit-for-tat or unpredictable path forward for tariffs are really going to hurt sales and ultimately hurt profits for the company. A weakening U.S. dollar is one of the other big stories. We are seeing the dollar down about 7% so far this year. That makes it really difficult on a company like Toyota when they make those U.S. profits to convert that money back to the Japanese yen. That money becomes worth a little bit less every time the strength of the dollar goes down. Shares of Toyota also finished down 0.5% today and are down about 2.5% from January 1st.
JD Durkin, as always, thank you so much.